Hi guys. So I want to break down this NZD card trade. You know, uh, um, we have two setups on NZD card that are currently running. This is the first one. This one we took a buy from here last week. This is the first one, and then we took another buy from here today. So it's the buy we took today. I want to explain, but I'll also explain this one. So when I think the buy we took today, this is what we took today. It was on the 1 hour time frame. We took this. Yeah. So we took a buy from here, NZD card, a buy from this POI on NZD card. So why did I take this? Yeah, NZD card here from here. We took a buy from here. So why did I take this buy on NZD card? I used ALGO market structure and liquidity, just structure and liquidity. That's all I trade. I trade structure and liquidity. Now, algo market structure. What is algo market structure? Algo market structure is the way the market actually moves. Now, they lied to us. The old sets or mentors or SMC, whatever, they told us the market moves like this. Higher highs and higher lows for buys. They told us the market moves like this. But it was a lie. It is a lie. And they told us the market moves like this. But it is a lie. The market does not move like this. The market moves like this. Everybody will make money because you can easily buy from here. You can easily sell from here. From here. You can easily sell from here. Nobody will even take any loss if the market actually moves like this. Now that's even have you ever seen the market moving like this? No. Big no. You have never seen the market move like this. The market does not move like that. This is how the market actually moves. And what you should know, the market moves like this. One, market moves in twos. So that's one, this is two. It has moved in twos, then to take out the previous low and what? Buy. One, two. Take out the previous low and what? Buy. Now let's label it. Let's say this first low is what? A. Let's say this is A. This second low is what? Let's say B. This third high is C. Now we expect C to always take out B, to always take B out. So C will always take B. Every time C will always take B, the market buys. In the sales scenario, we want to see A, B, and then this is C. Yeah, this is B, and this is A. So we want A to be protected. Our stop loss will be above A, our entry will be above B, and our tip will be around C. So we want price to take out B, we want C to take out B and then sell. So in the buy scenario, we want C to take out B and what? Buy. Now, so if C takes out B and buy, this becomes our A, this becomes our what? Our B. Yes, and this is our what? This is our C. Yeah. Now we want our C to what? Take out B and buy. Let me explain again. Now, the market moves like this. A, B, and what? C. Market moves A, B. If you actually understand how this thing moves, you will never have a problem understanding market structure again. This is how good market structure. I'll show you trades I've taken. Now, this is our A. Our stop loss will be below A. This is our B. And what? This is our C. Now, we want C to take out B and what? Buy. Now, when C takes out B and buy, this becomes our new A. This becomes our B. Then this becomes our C. Yeah. We want C to do what? Take out B and buy without invalidating A. Now, if we apply this to now, there's something we want to see in A. A must actually sweep liquidity. A must sweep liquidity. We said A, B, and C takes out B and buy. Now, A must sweep liquidity. A must sweep liquidity, a previous high or low, and break. Now, there is This C, this B is our liquidity. We want, because market moves for one reason. I believe the market moves for one reason, to take our liquidity. The market moves for liquidity. Now we want price to take this B out because there's liquidity in this B. Now at every high and low in the market, there is liquidity. What is liquidity? Liquidity is money. Now at every high or low, there is money. Now let me explain the psychology here. Now, some people saw a break of structure here. Some people trade based on break of structures. Now some people bought this thing here. They took buys here. Yeah. Now their stop loss was here. Was where? Here. Let me explain it like this so you can understand very well. Now this is the break of structure. Yeah. This is the break of structure. Somebody took buys. Somebody bought this pair. Yeah. Yeah. And then where's the logical place to put the stop loss? This is where you put the stop loss. Then what the market do? The market will take this stop loss out and what? Buy. Yeah. Now that's a liquidity sweep. His stop loss is where his money is. When the market takes his stop loss, they've taken his money. Yeah. Now that's liquidity. What that tell you liquidity was, liquidity is money. Now they've taken his money. That's a liquidity. Sweep of liquidity. They've taken his money. Now this is a break of structure again. Now when price broke this low, when market took his liquidity, some people saw this as a break of structure again, or church, or whatever you call it. So some people saw this as a break of structure again and sold. And when they put their stop loss, was here. Yeah. Now market did what? Market took their own stop loss again. Now after every break of structure, what do you expect? You expect a reversal, expect a retracement. Surprises come here to do what? Give us a B. Yeah. Now after this B, some people see a break of structure again. I told you the market moves for liquidity. After this B, some people see a break of structure again. And what will the market do? You know, the market always comes to take their liquidity. So some people put stop loss here. Some people that took break of structure here, that took the buys here, their stop loss is where? Their stop loss is here. Their stop loss is B. Now our own entry will now come below the ISL. Their stop loss is our own entry. We want to take our buy from below B. When price takes their stop loss, tags us in and what? Break. Now this is just how I trade. This is just how I trade, and this is how the market moves. You understand? You should understand now. Now, this is what we are going to talk about in the lock-in 1.0 this week. If you want to join, you can send a DM to me to join. Now, how did we take this trade? Like I said, look at, this is a break of structure. Break of structure. Yeah, now this is a sweep. Now, when price broke the structure, what happened? Some people took a buy here. Some people bought this pair and said, oh, it's going up, it's going up, it's going up. What the price do? Price came to take them out. Now, when price took them out, this is under break of structure, yeah? Some people took sales and put their stop loss here. Price did what? Price took them out again. Abi? Now, that's a sweep and a break. That makes this place our what? Our A. And that makes this place our what? A. It makes this place our B. Make this place our B. And what? This place our what? C. Now, so what do we expect? This is our A. A. This is our what? B. Oh, I took a trade on NZD card too. I've been explaining NZD card, not NZD CHF. But this happened too. I took this trade too. I'm on this trade. We are on this trade too. Yeah. Now what the price? The price took is what? Price took this B, and where is the price going to? Price going to this C. To break this C. Now we took the trade on NZD CHF, not NZD card. So I'm going to explain it on NZD CHF. I was looking at it that this is not what I took. But I feel NZD CHF and NZD card, they are very similar. Now, I'm on this. I took a buy. I took my first position from this place. But for this channel, I sent it around this place from this other block. That's why I sent the signal. But I took my own entry from this QMR. That's why I'm still holding it. So for the channel, our stop loss was here. And then our TP was just 3R. 3R. That smashed our TP. So now look at what market did here. These are what? A, right? These are what? B, Sorry. This is our B. What do we expect price to do? Take out the B and what? Take out the B and what? Buy. Take out the B and buy. Now that's just how the market moves. I can show you other examples. This is the second example I'm showing you. Now, I took a trade on GBP USD. I took a trade on GBP USD last week, and I took a trade on GBP NZD in December. I really love that trade because I made a lot of money on that trade. So as traders, we don't talk about money. We talk about entry. Yeah, we love the process. We don't love the money. We don't talk about the money. So I took that trade. I really liked the price action of that trade and all. But let me explain this GBP USD trade. Yeah, I took it last week. I even shared it with Lucky 1.0, my mentees. So this is A. Yeah, this is what. Oh, sorry. This is A. This is A. This is B. And what do we expect? Price take out what? B and buy. That's just what we want to see. Let's see price take out B and buy. Now I took one more trade here too. I took my entry from this breakout block. My entry was from this breakout block. So you want to pick the closest point of interest to B. Because when immediately price takes out B, price is buying, price is moving, buying or selling, price is moving. Now, so I took my entry from here. I'll show you on. I'll show you a sale example I took on US card. So immediately price took out this B, price bought. I actually did 3R on this trade. So immediately price took out B. I took the closest point of interest to B and then bought. That's why I already use other block. You see me take my entry from this side. That's a Quasimodo reversal. So this is something not everybody knows, but lucky enough, lucky for you guys, you are here, so you know it. Now, if everybody knows this thing, if everybody knows this thing, everybody everybody might be profitable, but trading is more about psychology. Now, so what do we see here? What do we see here? This is A, yeah. This is what B, and what do you expect? B always taking out. Now B was taking out, and what happened? GBP USD buy. Now I took my entry from where? This QMR. Took my entry from this QMR, this PY. Now, so I waited for B. Price take B out. This was my B. The price took B out and what? It bought massive. Look how the trade went. Let me show you the trade on GBP NZD I took. The trade I took on GBP NZD in December. On the 2 hours time frame in December. GBP NZD really paid us. I took it with the main channel, so you can check it on the main channel. I took it with them. Now, this was my point of interest. Now, that's a QMR. Now, if you see something, they told you other block, always pick other blocks. If you took other block here, you see price is never trigger this other block. Well, that's my QMR. That's where I took my trade from. And I shared it like with the main channel. You can check it. Now, what happened here? This was what? A break of structure. Some people took buys. Yeah? They took buys. Their stop loss was here. Price came to take their stop loss. They took sales. Their stop loss was here. Price took them out. Now that's our A. We expect our A to always protected. That's a protected low. Don't expect price to go below it until it completes this whole cycle. Now this is our B. This is B. What do we expect? Price take out B and what? Buy. That was a very good trade. This was a very, very good trade. Now I took one more trade. Let me show you the last example. GBP, CHF. I don't find that trade. I'll show you the example on USD card. Okay, I think yeah, this is it. This is it. Two entries. Two entries. Now what happened here? Look at it. We had what? A, B. We say price take out B and what? Buy. Yeah. That's one. Now look at this example too. Price did something like this. Now this is a break of structure. You know some people are buying already. Yeah, their stop loss is here. Now price took them out. Some people are selling again. Some people sell break of structure and change of character. Now this is their stop loss is above here. Price took them out again. Now we expect this place to be our what? Our A. Now this is our what? B. What do we expect next? Price taking out our what? B, and then what? Buying. This price took out B. That's just how the market moves. Let's check that USD card. And this is the last example I'll draw. All my trades, that's how I take my trades. But I also use directional bias, which is what we talked. Oh, this USD card, I shared it. I shared it with the main channel, the trade idea, but we didn't take it yesterday. So this is it. Now let me show you how I took this trade. I shared this trade last night with your. So this is how I took this USD card trade. Now what happened? Look at if you look at it very well. Price did something like this. A, B. What do we expect? Always take out B and what? Sell. That's a sell example. Now, why did I take this? Why did I take this sell again? On the 4 hours time frame, something happened. And this is what happened on the 4 hours time frame. If you look at the 4 hours time frame, this is A, this is B. Okay, let me cancel the previous. If you look at the 4 hours time frame, this is what? This is A, this is B. What do you expect price to do? Take out B and what? Sell. Now price was taking out B and price is selling. This will actually sell to this level. But I don't just like this trade. Why? Now, if you look at it very well, price has even gone above this level, took liquidity here. People put stop loss here. I know a lot of people took this trade. Now, people put stop loss here, and I knew price was going to take their stop loss before moving. Like we said, price moves for liquidity. That's why I give my trade enough space. Now, I took a trade on V15 1S. Yeah, I took a trade on V15 1S. This is the last. Oh, that was the last. That was supposed to be the last example. Okay, let me use V30 1S if I still have it. That was supposed to be the last example. Let me make this the last example. Now, look at this very well. What the price do? Price give us a break of structure here. Yeah. Now some people took buys, they put their stop loss here, looking at all these 24 hours time frame, daily time frame, price is going to keep buying. But what the price do? Price took them out. Now some people took sales, they put their stop loss here, saying okay, price will start selling. Now what the price do? Price took them out again. Yeah. And price, this was our what? Our A, this is our B, and what happened? This is our C. That's how we took this trade. We took it live on the synthetics channel. So that's all. I'm supposed to show you more, but because of time, that's all. Have a nice day.